Hey, how's it going, guys? All right, so the world didn't blow up after the Ethereum merge. I was a little bit concerned, just a little bit. But yeah, things aren't too bad. We obviously had that sell-off that I thought would happen because of a whole bunch of funds being unlocked. But honestly, it's the bear market anyways. We're gonna have these low prices, so just take advantage as much as you can, accumulate, right? So I'm going to go through the profits for investor share really quick, and then I'll dive into the charts and see what's going on. I haven't been actually be able to do any technical analysis myself, so I'll be just doing it along with you guys. Let's check it out, see what you guys got today. All right, so let's try to skip to today's profits. Caban Z, 2.61% with 5x leverage. Good job, man. Gabriel, 17% gain with 17x leverage, so that's a 1% move. Nice. Seems calculated. Very low capital. Don't worry, Kyle. All right, cool. 100x leverage. Yeah, okay. All right. Good thing it's low capital. Yeah, 247% gain, though. So you've more than doubled your fund, so good job there. Raymond, 11% gain with 10x leverage, 9% gain with 10x leverage, and Vixillary, 10% gain with 10x leverage. Awesome job, guys. All right, let's dive into the charts because we're finally starting to have like legit trading days coming back again now that the Ethereum merge is over, the CPI data is out, all that annoying stuff that gets in the way of trading is finally done, so we can actually look at the charts authentically and make some easier predictions. All right, so I'll see you guys on the inside, and yeah, see if we can find some more profits. All right, so first things first, let's look at the DXY. All right, so before we were looking at this broadening wedge structure right here, and it does look like it broke to the upside. They do tend to break to the upside, and they're more and more likely to break to the upside. The more descending it is, the more ascending it is, the more likely it is to break to the downside. Anyways, since we got the break to the upside, it does look like if I were to fix my trend line here a little bit, we did have like a little bit of a confirmation bounce off the trend line, flipping from resistance as support. The technical target was not hit, but when it comes to broadening wedges, guys, whenever you see a rejection inside of here, like inside the formation, and like see how there's like two rejections that define this trend line, you always got to watch where those rejections happen because those are usually locations where it could potentially keep you from hitting the technical target. The technical target's always the top of the formation. However, you can see here that this resistance stopped it from going any further. Anyways, so now that we have new structure, we hit the technical target here, we can find out and see if there's any other formations that are being built. So now we got more age on the chart at these new levels. All right, cool. So it looks like we got ourselves a pennant. Right on. All right, so yeah, this is like a symmetrical triangle, so this will act as most likely, these are like a towing costs. They basically either break to the downside or the upside, about 50-50, but you can look at the structure inside of the formation to kind of give you a heads up of which direction is most likely to break to. So you can see that we have a lot of bullish structure in this, unfortunately, for the DXY. So you can see we got double bottoms here, and we got a double bottom forming right now as we speak. And if you look in a more of a macro view, we have a larger double bottom right here. So if we end up seeing price action get above this little neckline right here, then the technical target for this little micro W would give us enough momentum to see the DXY break out of this formation, most likely to the upside. And if we get price action above this neckline right here, then we could, see the DXY pump even further from the momentum, giving us a larger target of 110. So that's basically telling us that, yeah, the DXY is most likely to break to the upside, so you could expect some more bearish activity with Bitcoin. But if we get rejected here, then maybe we'll see some more bear structure be in play, and this could turn into a double top rather than focusing on all these little micro W's in here. But yeah, that's what I see for the DXY, so just prepare for that. When it comes to looking at the Bitcoin charts, you might see a reverse reaction to Bitcoin. Going over to Bitcoin really quick. So you can see, I'm actually going to go to my primary chart. Yeah, because we were doing some trades here. We had a triangle here, broke to the downside, hit the technical target, and we got a triangle here that just broke to the downside, and we got the confirmation rejection right here, and then we came back down. And now we're back at these low levels that we feel like we just got out of, and now we're back here again. So there's nothing right at this moment for us to trade off of in terms of the short term. If we look and zoom out a little bit, just to give you a cleaner chart, it does look like we're starting to build a flag. So we got this descending support and descending resistance. Yeah, we got a flag being built right now. And if you look at the more of the microstructure here, we may find support here again. And if we do, then this will double bottom and have us revisit this downtrending level of resistance. When it comes to these flags, one thing you got to be paying the most attention to is not so much their technical targets, but the VPVR. So that when you break out of a flag, you focus on the valleys inside of the VPVR. Let me pull this out. So we got, this is an area of interest right here, for example. And for those of you who are a part of the Investor Share course, you guys know how the VPVR works. But if you're just a brand new member, then one thing you got to pay attention to are these areas of interest. They act as support and resistance. And then we got these valleys, which basically is a location where there hasn't been any real volume or price action within these little ranges. So price action usually just pumps right to the next area of interest. So we got a little bit of an area of interest right here. So if we end up breaking to the upside, then we have to pay attention to 20,800 as an area of resistance. Now, if we break to the downside, then basically we have this little valley right here that could bring us right to 19,380 roughly. And based off where that is right now, it could just be a continuation of the flag. Actually, if we come up, get rejected, might have a continuation of flag, and this will be dragged out a little bit longer. So it'd be something like this, right? Because we just look like we're having a bit of a double bottom being formed. We could trade off that double bottom, but double bottoms and double tops usually give you a 1-to-1 risk to reward ratio. So I'd usually recommend waiting for a confirmation rejection or confirmation off of the formation itself. That way you can use that confirmation as a location to put your stop loss, and you'd have a much better risk to reward ratio. But yeah, right now it's a slow bleed down to most likely around like 19,400. If we break to the upside, like I said before, just focus on 20,800 as a level of resistance. And if we break to the downside, then depends on how long it takes for us to break to the downside with this descending channel being built. But we have a lot of support at 18,700 right now. We don't want to lose that support for obvious reasons. If we pull out the larger time frame chart, we are building a falling wedge right now, and the next level of support within the formation itself is way down here around 14,800 based off today's date, or 15,000 based off today's date, and that gets lower and lower every single day. So basically, we gotta hope that we maintain this red line right here, this 19,700 as support as much as possible on the daily, and break out of this downtrending level of resistance. And if we break this downtrending level of resistance, then we might actually see the same kind of amount of volatility that we saw before when we went up and went back down, because of the reaction that traders are going to have off of this break of this trending level of resistance. So we may see a large pump, you know, sideways trading, have a formation being built roughly around here, and then hopefully break to the upside, react off of that, and then we may have a large double bottom being built right here. And kind of like what we saw with the DXY, it would be double bottoms being led to another double bottoms neckline, right? So we got this large double bottom formation that could potentially being built right now. So I'm expecting a lot of low volatility, but we can trade off of as much as we can off of the lower time frame charts until then. But yeah, that's pretty much everything we got for you guys in terms of Bitcoin. Let's jump over to the Ethereum really quick. So yeah, we had a lot of price action, obviously, from the Ethereum merge. I did not trade. I traded a little bit. I tried my best not to trade on the day of the Ethereum merge. I kind of went against my own advice when it came to that, and I did 3 trades and I lost one. And I don't usually lose trades that often. Like I trade, and like I guess the last 145 trades I lost 8 so far, and I just ignored my own advice and I got hit by a fake out and hit my stop loss. But yeah, we got this double top that was built during the merge event, and then we broke the neckline recently, and we dropped quite hard. So now we're basically waiting for Ethereum to build a new formation for us to trade off of. But if we build support off of here again, we may see a double bottom being built and break to the upside again. But that's theoretical. We don't know just yet. There's no actual structure assuming that yet. But if we've built support as we have over here, and we have another strong bounce, then we can watch this neckline for a potential break to the upside. The break to the upside would be giving us right back up to here. But this is really young. Like, we just had this large drop. So usually you'll have these formations these theoretical formations that are being built, but they don't actually play out the way you want them to be. So I'd recommend waiting until seeing a larger formation, because the bigger the formation, the more age it has, the more reliable it is. Usually the older formations, they have confirmation bounces, so you can verify your resistance and support levels, and then you can use those confirmations to give yourself more confidence to put the proper stop loss in place and get those profits. Yeah. So yeah, guys, that's pretty much everything I got for you. If you have any questions about everything I just said, just let me know. It does look like the S&P 500 is losing that support level, so hopefully we start seeing a wick bounce here soon. But I could pretty much guarantee you that the S&P would lose that if the DXY breaks to the upside. But yeah, that's everything I got for you guys. Reach out to me in the Discord if you need help with anything. Have yourself an amazing day, and I hope this has helped you out. Thank you.